going to take a quick whistle-stop tour through my portfolio and see what's been going on, because there have been an awful lot of things that have created the markets to move over the last month or so. And I suppose the biggest of all of those was the presidential election in the US at the start of November. Obviously, President-elect Trump has been voted in for a second term, and if we have a quick look at this S&P 500 chart, you can see the massive jump that the market took on the back of that, and it sort of continued to rally up a little bit until about a week after the election, and then it started to ease off, but we've started to see it pumping up again. S&P 500 over the whole year to date is up 27 and a bit percent, and if you just look at VWRP, the Vanguard FTSE All World ETF, it is up over 20% over the year to date. Markets have been doing particularly well, but will we continue to see that roll into the Christmas period, and will we get a Santa Claus rally? Who knows? But over the last 20 years, there have been 13 years where the Santa Claus rally has taken place. What might be more interesting and important is what actually happens next year, i.e. coming into January when we get the inauguration of President-elect Trump, and within that January of a first year of a new presidential term, we have seen quite a few rallies take place. And if that happens in January, potentially, if we look at what history tells us, 92% of those years then go on to be quite good in terms of the growth of the market. But who has a crystal ball and who knows what's going to happen in the future? I certainly don't, but let's wait and see what happens. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Let's jump across and have a look and see what is going on within my Trading 212 portfolio at the moment. Portfolio is just bouncing around that 45,000 mark constantly. What I do have is I've got about 45,000 actually invested and just a little tiny amount sat on this side. What we can see over the last month, the portfolio has been reasonably flat. If we have a quick look at the asset allocation, I still quite like this visual. It's nice and easy to see what's going on within the portfolio, and you can see the big two holdings that I do continue to hold are Realty Income, the monthly dividend company, and VUSA, the Vanguard S&P 500 ETF, with the S&P 500 being the largest holding that I continue to hold at about 18% of this portfolio. All in all, the portfolio is looking reasonably okay. I suppose which ones are down the most? Persimmon is down just over 20% at the moment, and this ties in with a few of the other house builders who have had a pretty horrid time, and you will see that it isn't just Persimmon that's been particularly hit within the portfolio. You will see that Vistry Group is also down pretty badly as well, and it's down about 16%. And the one that then splits that is the Renewable Infrastructure Group, and that's sort of sat at about 18% down in the portfolio. So that's looking at Vistry being third worst performing stock within the portfolio. Then you have the Renewable Infrastructure Group, and then finally, with a very small holding, Persimmon. What I'm not going to do is tell you which is the best performing stock within the portfolio, because that still continues to be Rolls-Royce. I'm just going to pick out a couple of the performers within my portfolio, and I'm going to kick off initially with the S&P 500. And actually, if we look at what this has done over the last year, it is up almost 30%, and this shows the benefit of potentially just picking an index or an ETF that just tracks the market and takes out all that noise and all of that effort in trying to pick individual stocks, be those growth or dividend stocks, and you might just end up getting a better return, and you might just find that that is a better way of doing it and makes life much easier. Rightmove, one that is up about 25% within my portfolio, portfolio, and actually over the year it is only up 15%. This is one of those stocks that I have bought into as more of a growth investment. It does pay a little bit of a dividend at that 1.4%, but I've invested into this one looking more for that capital appreciation. I've made one sale this month, and I suppose the whole reason behind this is I thought there were better opportunities from other stocks. So the stock that I have sold is Evolution Gaming. This one was at about 20% down, so I cut my losses on that, and what I have invested into is Bloomsbury Publishing. This company obviously has the Harry Potter series in there, but also has the Sarah Jane Maas series coming through, with a number of books planned to be released over the next coming years. And HBO, I believe, are also doing a Harry Potter series on the TV, so potentially what we will see is an increase in the purchases of those books, which will hopefully drive growth within the Bloomsbury Publishing side of things. On top of hoping for growth in this stock, which is currently sat at a PE ratio of just over 5 times 14, we are looking at a dividend yield in there of 2.25%. But as I said, potentially there is much more growth in this company over time, and you can see up 44% over the last year. I also looked at adding to UKW, and I bought in a number more shares into this, averaging into this position. Also added into Legal and General, bought another 100 shares of that, and it is currently paying a dividend yield of 8.9%. Legal and General, very happy to just keep buying into this one and sort of growing this to be a slightly larger proportion of my holdings within this monthly dividend pie. Vistry has had a particularly bad time over the last 3 months. As you can see, it is down almost 50%. I have averaged into this a little bit more, and the whole reason behind this drop is the last earnings call. They had said there had been some issues with the pricing of materials, which had led to a reduction in profits that they are likely to make over the next period. But given the fact that the Labour government is looking to drive growth within the house building sector, I do believe that there are some companies like Vistry who are going to be delivering that social housing requirement and aiming to get that 1.5 million new homes built within the UK over the next 5-year period. I think there are some benefits of investing into companies like Vistry, Bellway, Persimmon. So let's wait and see whereabouts we get to with this stock. And I've added a tiny little holding into Oxford Lane Capital, just to see what happens with this. This is just a little bit of a dabble. We do have a dividend yield of 19% there. Do not go chasing huge dividends like this. I just wanted to do this just for a little bit of a test, see what happens if you do invest into things like this, but this potentially could be a dividend trap, so not something that I am recommending that you go and do. Hopefully that has been of some interest. You've seen what's been going on within my portfolio, some of the purchases and sales that I've made, and if you want to, you can go and have a quick look at my latest video that looks at the dividends that I've picked up over the last month, but this is going to be a reasonably good month for dividends as well, because I get all my ETFs paying towards the end of December. Thanks very much for watching, and I will see you in the next one. Cheers, bye.